Property market, a complete information about a real estate industry, whether you buying, selling, renting or investing. Each episode with a new real estate expert discussing on property market, debt, financing option, investment return, future planning, careers and many more. Only on London Nepalnews. This program is brought to you by Multi-Dynamic Real Estate. Honest, reliable, dynamic, Australia's trusted and fastest growing real estate. Hello and welcome to London Nepal News. My name is Takdir Adhikari. This is our second episode of Property Market. In this program, we'll invite a real estate expert and provide you all information you need for the real estate industry, whether you're buying, selling, renting or investing. In last episode, we have discussed about how to find the best real estate agent. In this program, we have mortgage broker who will be helping for the individual to find the loan, working as a bridge between the bank and individual. To discuss with this matter, we have mortgage broker who has been working for this industry for a very long time, St. Peterson. And today we will be discussing about why people need a mortgage broker, what are the benefits having the mortgage broker in your purchasing process. Without further delay, let's welcome our guest to the show. Welcome to the show, sir.
Pleasure to meet you. Pleasure. Thank you for having me.
How you been?
Yeah, not bad. Thank you very much. As good as can be.
So please tell us about yourself and what company you are working with now.
Yeah. So my name is Shane Petros. I'm the director of Australian Finance Hub. Australian Finance Hub is a small brokerage in southwest Sydney, or the suburb of Prestons, and within the brokerage we've got two sections of the business. We've got a finance broking and we've also got a financial planning part of the business. So we've been around for about 4 years now, and we established it about 4 years ago. However, now we've got it to the stage that we're roughly around the top 1% of mortgage brokers within the whole country. So yeah, that's a little bit about us.
How did you get involved in this business?
Yeah, so I started myself doing a university degree, and I did a university degree in finance, and I majored in funds management and applied finance. As soon as I finished with the degree, I started working with a mob called GE Money, and I was in mortgage repositions when I was doing that. A few years later, I then moved on to become a teller. I then became a teller at Bankwest, owned by the Commonwealth Bank. And year by year, I was with Bankwest for 8 years, and year by year I progressed and got promoted to promotion to promotion. By the time I left Bankwest, I was the regional manager at Bankwest, looking after the southwest Sydney district, and I had a team of mobile bankers and business bankers reporting to me. And then after that, I got to a crossroads whether I was going to continue to go into the banking path or whether I was going to start my own business, and I was a bit of a crossroads. So I decided, no, I'm going to start my own business. Now is the best time to do it. And I thought I'd take the leap of faith to start my business about 4 years ago, and we are here now.
Right. So people, they do bank every day, right?
Yes.
So bank and people, they know each other. But why people need to use a broker?
The thing is, with a mortgage broker, they're not limited to one bank. I mean, you might be with St. George and you might have only ever been with St. George for argument's sake, and you don't know anything but St. George. And St. George might be the best offering you if you're a particular individual. However, as a mortgage broker, I can look at about 40 different banks. So I can look at St. George, Commonwealth, Westpac, ANZ, and I've got a wide range of 40 different lenders to say, okay, St. George might not be the best offer for you. I'm not saying that it won't be, I'm just saying for an example. But CBA is a better option for you for this instance, or Bankwest is a better option for you this instance. So depending on the individual that's sitting in front of me, I'll say, okay, I don't really think St. George is a better option for you. Why don't we go with X, Y, or Z? Because here's the solution, here's the offer for you.
Right. Do people need to check on their broker whether he's been registered with any organization or has any qualification?
In order for you to be a broker,
Yeah.
you need to have a license, first of all, and you need to be registered with a governing body, like an MFAA or FBAA. And if you Google the broker, you can very quickly find out whether they're registered with one of those governing bodies. But I'm sure that If they don't have that, they won't be a registered broker. So they definitely be looking at FBAA or MFAA as one of those mortgage finance associations and registered with those. So if you log on to any of those, type in the broker's name, you'll be able to find out whether they're registered or not.
Right. Does broker charge a breakage fee, or how the broker gets paid?
Well, it depends. Majority of the time, the broker gets paid by the bank. Okay, so but it really depends, depending on the scenario and depending on the situation. So if it's a commercial property, sometimes the broker will get paid by the customer if it's a commercial property. If it's a development company, sometimes a development loan, sometimes it will be paid by the customer. But majority of the time, depending on the brokerage, obviously, majority of the time, if it's a residential loan, the customer does not need to pay for the broker, and the broker will get paid by the banks.
Yeah, how do you decide the individual this loan is the best suited for you? Because now the market, all the bank and all the creditors are competitive, right? There is many choices to choose from.
Yes.
And how do you decide that this loan is the best for this individual?
I think with that, a lot of the time it's not about the rate. A lot of the time, sometimes it's about the rate, but a lot of the time it's not about the rate, because everyone's circumstance is different. Some people are contractors, some people are casual employees, some people are working full-time, some people are sole traders, some people are companies. So, and specific banks have different criteria when you're looking at a certain customer. So certain banks might be better with companies, certain banks might be better with casuals, certain banks might be better with a lower deposit, whether certain banks might be better with a higher deposit. Some banks allow for guarantor loans, some banks don't allow for guarantor loans. So depending on that circumstance, what your work is, how much of a deposit you have, what your scenario is, what your credit history looks like, then we'll be able to say, I think we should go, your options are X, Y, and Z bank. And you choose which bank you want to go with. These are your three top banks that we're probably looking for. One, because of the rate, and two, because you'll be suited for that bank, according to the information that you have told me. Does that make sense?
Right.
Yeah.
So what I'm trying to tell you is, there are many people they offering and different incentive there, right?
Yeah.
How people know this is the best rate? This broker is very good for dealing. It's not for himself. It's for the individuals they on their side.
Yeah.
So how do people know the
First
best
of all,
comparison?
I think with the broking industry,
Yeah.
a lot of the time, what the banks pay the brokers are the same across all banks.
Right.
So it's not like they'll go to one bank and they're going to get a different commission from the other banks. Majority of the time, it's the same commissions. So to go to one bank rather than the other, it's not going to really benefit the broker.
Right.
However, in saying that, what I would suggest to you before you're finding a broker is to ask questions.
Right.
You're going to have to want to feel comfortable with that broker. You have to feel that the broker knows what they're talking about and they have confidence in knowing what they're talking about. So you feel more confident in dealing with dealing with your finances, because buying a home or building a home is a big thing in your life. So you want to feel confident with the person you're dealing with. So ask as many questions as you can, and maybe nothing's better than a Google review. Looking on their website, seeing what their website looks like, and looking at their Google reviews to see what past customers' experiences have been, and see what they say. And by doing that, you'll be able to make a decision whether, yes, I like this broker and I want to do my business with this broker, or I think I'm going to find someone else.
Right. For example, people are, when they're doing window shopping, let's say they just want to get the idea. They're not committed to buy the property. In this situation, many real estate agent, even the broker, they don't give the actual information people need. And that cases, what sort of information individual can give to the broker if they're not decided finally?
So in that situation, what I would say is give them your financial position, but don't give them any of your ID documents.
Right.
Because they will need your ID documents to do credit checks on you and to submit an application with you. And definitely don't sign any application forms until you're 100% confident that you'll be going with that particular broker. So one, don't sign any forms because they can't submit unless you have a signed form. And two, don't give any ID documentation because they can't submit unless they have ID documentation. And that way, you know that broker can't go away and submit an application for you or do any sort of credit inquiry that will harm your credit score.
Right. Can customers choose their interest rate later on? For example, they decided to go for the purchase a property, right? And then can they say, can they make the decision on their favor, or the broker has to make the decision whether people want to keep the rate as a fixed or the variable? You say that, right?
Yeah. So as a broker,
right,
the broker can never recommend this is what you're going to do. All a mortgage broker can do is say, this is option 1, this is option 2, option 3. Here's a variable loan, here's a fixed loan, and here's a loan that's got part of it fixed, part of it variable. And then it's up to the consumer, being you, to say, okay, I think we want to go with the fixed, or I think we want to go with variable, I think we want to fix it. Have a part fixed and part variable. But the broker will never be able to make that decision for you. All he can do is give the customer options, and the options will be decided by the customer to see what their final decision is and how they want to proceed.
So the job of the broker is just to work as a bridge between individual and bank.
That is all it is.
Right.
Knowing the policies back to front, knowing
right,
which bank to go to according to the person that's sitting in front of them, whether what their employment looks like, how much the deposits are, and how their credit scores are, and then providing those options to
right,
the consumer,
right,
and then consumers got to work out the rest and say, yes, we want to go with X because of the fixed rate or because of the variable rate, or we want to go with bank A because we know them or we've done their banking with them for many years. Or it's up to the consumer at the end of the day. All the broker can do is give options.
What impact will have the people if they have a credit limit there? For example, if the individual has a higher credit limit, what impact they will have in terms of getting the finance approved?
In terms of credit limit, in terms of other debts you're talking about?
So we'll start with just a credit limit. So it hasn't been used up, but it has a credit card limit. Let's say 50,000 someone has.
Yeah.
So that money has not been used, but can that be impact on the in terms of the approval of the financial?
Absolutely. So
right,
even if, let's say you've got a credit card,
right,
and you've never used that credit card,
right,
and let's say for argument's sake it's got a $10,000 limit, but it's always been zero, but you've never used it.
right,
The banks at school are going to know that you've got that credit card because it shows on your credit score now.
right,
And by having that $10,000 credit card, even though you don't use it, generally affects your borrowing capacity between 4 and 5 times
right,
that amount.
right,
So if you've got a $10,000 credit card, you're probably getting less of a loan amount by about $40,000 to $50,000. If you've got a $50,000 credit card, your borrowing capacity is coming down by about $200,000 to $250,000 on average.
right,
Same thing with a car loan. It's generally 4 to 5 times. So if you've got a $50,000 car loan, you're probably looking at a reduced loan amount by about $250,000. So give or take between 4 or 5 times of the limit. That's how much your borrowing capacity will come down by.
right. What about the credit report? For example, if some individual had a credit report default on them, right? So, for example, one person has declared bankruptcy like 5 years, 3 years ago,
Yes.
and that will impact on the people in terms of improving the loan.
Of course, yeah, absolutely. So if you've got a bankruptcy,
Yeah.
there's no way you'll be able to get a loan until that bankruptcy is actually come off. If you've got a default or judgment,
Right.
depending on the amount, when it was placed, and whether it's been paid or not, some banks and some lenders will potentially look at it. But also, the big thing is, people understand, is now on your credit report, you'll be able to see every single payment on every single loan. So if you've got a credit card, if you've got a home loan, if you've got a personal loan, you've got a car loan, that's all going to show on your credit report for the last 2 years, whether you've made your payment to that loan, or whether you haven't made your payment to that loan, whether you're in arrears or whether you're not in arrears. So you'll be able to see all that information on your credit report now. And majority of the time, if the bank sees one missed payment over the last 12-month period, it's okay, right? As long as they don't see multiple missed payments on multiple facilities. But if that's the case, you probably won't be looking at a bank. You look at a second-tier lender like a Pepper Money or a Bluestone or something like that. but the interest rates are a little bit higher. So,
When you say paper money, what does it mean? This is different than bank?
sorry, what was that?
Oh,
say?
you say paper money, right?
Yeah.
What is that?
So there's multiple classifications
Right.
of banks. So
Right.
you've also got the big four,
Right.
which is CBA, NAB, ANZ, and Westpac.
Mm-hmm.
Then you've got the second tiers
Right.
banks, and the non-banks like the Bank West, St George, Bendigo Bank, AMP, Macquarie banks. Then you have the third tier lenders, which are the banks that the lenders that aren't banks but do give funding out. So those kind of the customers are the customers that are in a default, in arrears, or they have to go for them for a servicing issue. If they can't borrow the amount they can with the bigger banks, then they have to go to the smaller banks. So they're the kind of banks, the Pepper Moneys, the Bluestones, and so on.
I imagine the rate will be changed, will be different, right?
Correct.
Because if you are getting from the proper bank, like a big bank, then paper money.
Correct.
So the interest rate high or the capacity will be lower. What effect will be there?
Once again, it depends on the circumstance. So
Right.
Pepper Money and Bluestone still have products that will compete with the big banks.
Right.
If you're that type of customer and your credit history is clear, you've got a good deposit.
Right.
But majority of the time when you go to those guys, it's you've got a default or your judgment or you miss payments. So
Right.
by going to them, the banks might not have given you money, but those guys will give you money, and obviously the interest rate will be a little bit higher in most instances.
Right. For example, the renting. For example, someone is renting for a very long time,
Yes.
but they do not have the very good rental history, and that will affect the people to get the loan from the bank, or not necessarily.
Not necessarily. Not necessarily.
Right.
Unless they've only got a minimal deposit.
Right.
If someone's got a 5% deposit
Right.
or a 10% deposit and they want to get a loan,
Right.
and let's say they haven't had those funds, the 5% or the 10% deposit, in their account for 3 months or more,
Right.
then they're going to look at their rental histories to say, okay, you've made your payments on time, yes, we'll accept that money. Or if they haven't had the money, if they had the money in the last 3 months and it's been there for more than 3 months and the monies have been sitting there, they won't look at their rental histories.
Property market, a complete information about a real estate industry, whether you buying, selling, renting or investing. Each episode with a new real estate expert discussing on property market, debt, financing option, investment return, future planning, careers and many more. Only on London Nepalnews. This program is brought to you by Multi-Dynamic Real Estate. Honest, reliable, dynamic, Australia's trusted and fastest growing real estate. How the people know this is the best time to refinance? Only they have to rely on the mortgage broker, or they have to look around, because the mortgage broker probably do not prefer to change the bank, because if they change the bank, they will not get paid, right?
That's not the case at all.
Right.
If they get paid, so with refinancing,
Right,
it really depends on the mortgage broker and what their strategy is.
right,
From my side of things,
Right.
and my client base, I've got a full-time employee just looking after our existing customers.
right,
And all they do is, if you've been with us for 6 months, 12 months, 18 months, 24 months,
right,
every 6 months we will go back to your bank
right,
and negotiate your interest rate on the back end without even you knowing,
right,
to make sure that you're always getting the best rate possible.
right,
Okay? After 2 to 3 years of doing that, we'll do a sit down again with the customers and say, okay, how's your circumstances looking? What's your plan? Do you want to know another property? Do you want to keep your property? Do you want to sell your property? Tell me what your plan is. And if the plan is to keep it, then we'll look at other banks, see what the other banks are offering. And then we'll work out what the other bank's offering. If there's better interest rates than with another bank, we'll move that bank. We'll move it to that bank. Whereas if we go back and negotiate with your current bank and the same interest rate as what the other banks are offering anyway, we'll keep it with the same bank. But we want to always make sure that you're getting the best interest rate in the market at all times. And by doing that, and by having a full-time customer service that's always negotiating on the back end with the banks without you knowing, we'll ensure that we do that. I do say that not a lot of brokers do that, but I can only speak for myself.
Right. So it's not always the same case. For example, someone is doing banking for 5 years and they have the loan on CBA, for example. So if the person decided to go to another bank, still the mortgage broker will get the pay?
As long as the mortgage broker has done the loan, absolutely.
Yeah. Okay.
Yeah, absolutely. Yeah.
Right. So we are in a pandemic situation now, COVID-19. So what are the impact on the credit or lenders have during this time?
Yeah, so it's been an interesting 6 months.
Right.
Extremely interesting. A lot of the banks were not knowing how to accept any loans when it first started. Nobody knew what the banks wanted. And it was drip feeding, slowly to say, okay, we want this now, we want this now. So every day was a different mission for us because we didn't know what the banks wanted and they were always changing the goalposts to what we wanted. However, now we've got quite a very good idea of what they're wanting because they made it quite clear now. But they are asking for more information. They want to know, have you been impacted by COVID? How have you been impacted by COVID? If you haven't been impacted by COVID, show us your bank statements and show us your salary for the last 3 months. If you have been impacted by COVID, we want to know what's your plan to get back to normal. Okay, so if you're on a 50% pay or you're on JobKeeper at the moment, when is your employer planning to put you back onto full time? So this all comes in the planning phase. So you need to have set plans with what you're wanting to do. But in terms of the banks, they're just asking a little bit more questions about what your scenario is at the moment. Is it been affected? If it hasn't, excellent. If it has, what's the plan? So
yeah, for example, individual they just lost the job and during short time, let's say 3 months there.
Yes.
So and they go on to the job keeper that time. Job seeker now.
Yes, yeah.
So after that, so recently it's getting back to the normal, right? So that time will affect on the credit history or in terms of the getting loan, the history.
In terms of getting a loan.
Yes.
So if you do have current debts,
yeah,
if you speak to your bank,
yeah,
majority of the time either they can put you on interest-only repayments, so they can reduce your payments on a month-to-month so you can afford to pay it, or they'll look at capitalizing interest, stopping your payments for a certain amount of time and capitalizing, put it on top of the loan. So therefore, when you're back to normal work, your payments will resume as per longer. However, your term, instead of being 28 years, they might put 28 and a half years back on the term. So they extend it back by the amount that you've stopped it by. But in saying that, depending on the bank, once again, if you have that agreement with them, your credit report won't be affected.
For the new person, they will be, if it's like no payment during that time, and then recently it gone back to the normal as a job, full time, full capacity job. Will that affect?
Yes. So
during that gap time?
If you stop working and you got affected by COVID,
yeah,
and you started work again,
yes,
the banks will generally,
yeah,
depending on the bank, will require you to be back to work for 3 months before they look at you again.
right.
If there was no gap,
Right.
so let's say I'm a plumber,
Right.
and I stopped working 2 months ago
Right.
with one plumbing company, and I started working with another plumbing company straight away within next week, because there's been no gap,
Right.
and because I'm doing the same thing as what I was, and I've been in the industry for more than 2 years. They won't require you to be there for 3 months. You can literally apply straight away. However, if you're doing plumbing today and you stop for 6 months and then you find another job, they'll require you to be there for 3 months before they'll look at you.
So in terms of the first, there are many type of buyers, right? Some of them investor, the second homeowner, sometimes first time owner. The individual, they are looking to buy the house in future. So do they have to go through the broker first, or they go to the real estate to know what's happening, or what they need to be doing?
Well, generally, the second home buyers and the third home buyers and the investors know when. But as a first home buyer, it's very, very important to seek finance first and see a mortgage broker first. Because what that's going to do is, by sitting down together,
Right.
you'll be able to put a plan into place. And so if you had no idea what the bank's eligibility is, how much deposit you need, how much you can borrow, and you go to a property and you want to buy a property and you're putting a deposit down and you don't know whether you got finance, you're putting yourself into a hole. Whereas if you go to a mortgage broker first and say, this is my situation, they will be able to tell you, okay, based on your situation, this is how much you can borrow, this is what bank we've probably be looking to go with, this is what your interest rates are, this is what your repayments are going to be, this is how much deposit you need, and then they'll also guide you through the process around how long everything takes, what documentation is required, and what the whole process looks like. So then you're more equipped and you're well educated about what to do next when you're going to look for a property, rather than going to something blindly. All the good mortgage brokers will put that plan into place first before you're going to look for the property. And sometimes, as first-time buyers, when the mortgage broker looks at their financial position, they'll say, okay, you want to buy a property for $650,000. You need a minimum of 5% deposit. That's $32,500. However, at the moment, you've only got $25,000. You need to go and save X amount every single week in order for you to get to where you want to be. Then you can come back and we can submit. So a lot of the time with first-time buyers, it's not just about giving them info, it's about planning. To have a plan in place in 1 month or 2 months or 3 months time for them to come back to you and say, we've done the plan and we can submit now, we're looking to buy a property actively now. So a lot of the first time buyers is around the planning, but definitely need to seek a mortgage broker first to put that plan into place so that you can execute it when you're ready.
What do you suggest for the newcomers, the people who want to join as a career as a mortgage broker?
Couple things.
Mm-hmm.
The first one is have a business plan.
Right.
Very, very important to have a business plan, because your business plan will basically lay out what your foundations of your company is and roll out the processes and systems that you'll need in order for you to get to where you want to go. So by having a paper or on the computer business plan, you're setting your goals and you need to execute those goals by doing A, B, and C. If you don't have a business plan, you're basically starting very, very on the back foot. You're starting on the back foot. So by having a business plan, you're starting on the front foot, and you've got a plan, and in that business plan, it'll tell you exactly what you need to do in order for you to get to those goals. That's the first thing. Second thing is you need to know the bank's policy. You need to have good relationships with the banks, because at the end of the day, if you don't have a good relationship and a good reputation with the banks, it's not going to help you at all, because it all comes down to relationships, majority of the time. So if I was a new broker, I'd familiarise myself with the BDMs of the banks and the managers of the banks, and also understand what the policies of the banks have, so you know the difference of the banks and you know which bank to take your client to depending on the circumstances, as we were talking before. The third and most important thing is you need to have good networks. Your networks are your net worth. That's a saying that they say, your network is your net worth.
Right.
The more people you know, the more business you're going to have. In this game, but to find the clients is the very hard part. So if you're a new mortgage broker, the most important thing is having to know more people. People like Mega, that deal with people buying every single day, that a very well-established real estate company that's selling multiple properties every year. He's going to come across multiple buyers on a day-to-day basis. So if you've got someone like Mega sending business to you because he trusts you, and if you can convert them and show Mega, okay, I know what I'm talking about and I can get the deals approved, it looks good on me because I'm the broker. It's good for Mega because he's showing that he knows good brokers and he's good building that reputation for his business. And it's good for the client because the client's getting the deals approved and he's getting a good product and he's moving into the property that he wants to buy and he's moving to the house of his dreams. So it's good for everyone. So if you have, multiple Megas and multiple solicitors, multiple accountants and multiple financial planners that are all feeding your business, that's what you want. And at the moment, we've got about 60 to 70 referral partners within my office, excuse me, that are continually sending us business because they trust us and they know that we're looking after the client and we're getting the best deals in the market, as well as doing it quite quickly. So, 3 things: business plan for a new broker, knowing the banks and having a good relationship with the banks, and having a good network and establishing that network with multiple businesses such as Multi-Dynamic.
I thank you for your time today and information. Thank you.
Thank you for having me, and thank you for London Nepalnews for having me, and thank you for Multi-Dynamic to make the introduction to you guys. It's a pleasure to be here.
Thank you. We have come to the end of the show. Thank you for watching us, and then we will come back with a brand new show with another content. Till that time, bye for now. Property market, a complete information about a real estate industry, whether you buying, selling, renting or investing. Each episode with a new real estate expert discussing on property market, debt, financing option, investment return, future planning, careers and many more. Only on London Nepalnews. This program is brought to you by Multi-Dynamic Real Estate. Honest, reliable, dynamic, Australia's trusted and fastest growing real estate.